Hello everyone. In today's class, we're going to cover more questions on shares issued under pro-rata basis and issue is at premium. So this is question number 78 from T.S. Gareva. So let's get started. Saregama Limited invited application for 80,000 equity shares of 100 rupees each at a premium of 10 rupees. Amount payable as follows: 30 rupees application, 30 allotment including premium. So that means 20 towards share capital, 10 towards SPR. First call 30 rupees, then balance on final count. So what is balance? 30 plus 20 plus 30. So that makes it 80, 100 minus 80, 20 balance. So 20 rupees is the final call money. Now, application for 1,20,000 shares were received. So it's an oversubscription. Allotment was made on pro-rata basis to all applicants. So no rejection or refund here. Excess application money received on application was adjusted on sum due on allotment. Fine, let's stop here and finish the application entries first. Application stage. Bank to share application, receipt entry. 1,20,000 shares were subscribed by public. Application money is 30 rupees. So receipt of application money is 36 lakhs. But the company can give only 80,000 shares to public. So what are they going to do with the remaining amount? It is said in the question that remaining is transferred towards allotment. And also it is said that prepare calls in arrears account and calls in advance account. Therefore, the journal entry will be share application account 36 lakhs to share capital, that is 80,000 shares into 30 rupees, 24 lakhs. The remaining amount, that is the excess. Usually we write share allotment here or allotment in advance. But since the question clearly says follow calls in advance, calls in advance account is created and it is credited for 12 lakh. So application entry is over. Now let's get into the allotment. Allotment was 30 rupees, 20 rupees towards share capital, 10 rupees towards SPR. Dhwani, who was allotted 1,600 shares, failed to pay the allotment money. And Sargam, who was applied 6,000 shares, did not pay the first call money. So right now we are in the stage of allotment. So we are not concerned about Sargam. We are only concerned about Dhwani now. Now, every shareholder have come under pro-rata here because the number of shares applied is 1,20,000 and number of shares allotted is 80. So Dhwani would have applied for more number of shares because question says she has been allotted 1,600. Definitely she would have applied for more number of shares. So let us first find out how many shares are applied by her. For that, let's do the working note. Working note number 1. Number of shares applied 1,20,000. Number of shares allotted 80,000. Cancelling the zeros, it's 12:8. Reduced to 3:2. So that means for every 3 shares applied, 2 shares were allotted. For every 3 shares applied, 2 shares were allotted. As per the question, number of shares allotted to Dhwani is 1,600. Now find out the number of shares applied by Dhwani, which is nothing but direct variation. Applied is 3, allotted is 2. So if allotted is 1,600, what is applied? 1,600 into 3 by 2. 1,600 into 3 by 2, which works out to 2,400. That means Dhwani applied for 2,000 shares and she was given only 1600 shares. So excess shares will be the difference here. Excess number of shares is 2400 minus 1600, 800 shares. So excess application money will be 800 into 30, 24,000. So Dhwani has paid 24,000 in excess at the stage of application. And then she failed to pay the allotment. So let us find out her actual arrears. Allotment due from Dhwani is 1600 shares into 30, 48,000. She already paid 24,000 excess at the stage of application, which is actually transferred to allotment only. So excess is adjusted here. So remaining 24,000. 48 minus 24, 24. 24,000. This is allotment in arrears. But since the question clearly says maintain calls in arrears account, we will not use allotment in arrears, we will write calls in arrears. Now, so this is her arrears. Alright. Now let's go to the allotment journal entry. Now allotment stage journal entry. Share allotment account data 80,000 into 30, 24 lakh. Allotment is with SPR. So 2 SPR, 80,000 into 10. 2 share capital, 80,000 into 20, 16 lakh. And what is this entry called? This is the due entry. Now, let's pass the receipt entry. Due entry meaning this much amount is expected to receive at the stage of allotment. But are we receiving this? That is what we have to see in the receipt entry. Bank account data, calls in advance account data, calls in arrears account data to share allotment account. Well, first I would be filling share allotment figure because I know what I'm expected to get at this stage. I'm expected to get 24 lakh, so I'll be filling that figure first. Then already 12 lakh is received. If you see in the application stage, we have created an account called calls in advance account. Where is this money going? This money will be adjusted to allotment only. So when you pass a receipt entry, if advance is credited here, advance will be debited here. So out of 24 lakh, out of 24 lakh, 12 lakh is received in advance. Then Dhwani has failed to pay 24,000. We got it from that working note. So what we actually receive is only 11 lakh and 76,000. 24 lakh due, 12 lakh already transferred from application, 24,000 due from Dhwani. So actually what received is 11 lakh and 76,000. So this way we finish the allotment entry. The next is the call entry. Now let us see where the forfeiture is made. Is it immediately after the allotment or is it after the first call? For that we need to read the question again. Now, Sargam who has applied for 6,000 shares did not pay the first call. These shares were forfeited immediately after the first call. So all forfeiture is happening after the first call. So now let's finish the first call entry. Share first call account data to share capital, due entry, number of shares 80,000, installment price at first call is 30 rupees, so 24 lakh. Receipt entry, bank to share first call, but then Sargam has not paid the first call. But is it only the Sargam? No. Dhwani also not paid the first call. Dhwani failed to pay the allotment. Dhwani also not paid the first call. So any shareholder who had not paid an installment will not pay the subsequent installment also. So therefore, 1,600 of Dhwani share, 4,000 of Sargam shares, total to 3,600 shares. Into 30 rupees first call. Therefore, total calls in arrears is 1,68,000. So out of 24 lakh, we didn't receive 1,68,000. So what we receive is 22 lakh and 32,000. The difference. First call entry is over. The shares are forfeited immediately after the first call. So next is to moving towards the forfeiture entry. Well, it is better you pass a combined entry, but to understand the concept better, I would prefer a separate entry, and then I'll show you a combined entry for this. So separate forfeiture entry for Dhwani and separate forfeiture entry for Sarkar. Now, mind you, the number of shares for which Dhwani has not paid her allotment and first call is 1600. So, therefore, Dhwani's forfeiture will be for 1600 shares. And Sargam failed to pay only the first call money. And she is a holder of, we don't know, because it is said in the question that she was applied 6000 shares. So, again, you do the ratio part for every 3 shares. For every 3 shares, 2 shares were given. So if she has been applied for 6000 shares, find out how many shares allotted to her. You'll come to know that she has allotted 4000 shares. Alright. So through that, we will pass the forfeiture entry of Sarkar. Now first one is forfeiture. Share capital account 1600 into 80 rupees because called up value is only till the first call. Final call has not been made. So 1600 into 80. Dhwani didn't pay the allotment, so that means she didn't pay the SPR also. So SPR will be debited. But don't fill this amount right now. You can't fill this amount right now, so this will be left empty. Share capital we can fill, SPR we leave it blank. Calls in arrears. Well, it's better you have one account for that, but in order to understand it better, I have separated as calls in arrears for allotment, calls in arrears for first call. Calls in arrears for allotment, she has, we need to do a working note for that also now. Yeah. So if you watched my previous video, you would have understood that if there is any excess at the stage of application and that has been transferred to allotment, and if the allotment is with SPR, the extra figure is first adjusted towards the share capital, and then if any balance left, it would have been adjusted to SPR. So please check question number 51 and 71 for that. That is how we dealt that questions. Here, the excess is 24,000. Dhwani excess is 24,000, and that is adjusted from 48,000. What is this 48 allotment due? How? 48,000, 1600 into 20 towards share capital, 1600 into 10 towards SPR. Any excess will be first adjusted towards share capital. So I'll adjust this 24 first towards this 32,000. So that means out of 32, 24 is accepted as paid. So 8,000 remaining. And therefore SPR is completely nil. Nothing is received towards SPR. Alright. So if there is any fund remaining after adjusting the share capital, it would be adjusted to SPR. Here there is no such money. Entire excess is adjusted towards share capital. No fund is left. Therefore entire SPR is valid as arrears. Now let's go to the forfeiture entry. So SPR figure as I showed you 16,000. Allotment in arrears, she has to pay 8,000 towards share capital and 16,000 towards SPR. So total allotment in arrears is 24,000. Calls in arrears, she is the holder of 1600 shares. She didn't pay 30 rupees, so 48,000. Now if you want, you can merge this into only one account as calls in arrears and total this 24 plus 48. Or you can even keep it like this. 2 share forfeiture is the balancing figure. So 1,28,000 plus 16 minus 24 and 48. You will get the answer as 72,000, and that I have named it as balancing figure. Now Sargam's forfeiture. Sargam, holder of 4,000 shares. She's been allotted 4,000 share. She failed to pay only the first call. That means she paid allotment, so premium also paid. So premium will not come in the allotment entry. Share capital account, number of shares forfeited into the called up value. Called up value is 80 rupees. Calls in arrears, she failed to pay only the first call, so 4,000 into 30. Share forfeiture, whatever she paid 30 rupees application, she paid 20 rupees allotment without SPR because SPR is already paid. So we don't include SPR here. So 4,000 into 50, 2 lakh. So out of 3 lakh 20, the company already received 2 lakh and 1 lakh 20 is arrears from Sarkar. Now if you want, you can pass a combined entry for this, which means share capital account will be totally debited by 1 lakh 28 plus 3 lakh 20. Share capital account will be totally debited by 1 lakh 28 plus 3 lakh 20. SPR debited by 16,000. Calls in arrears debited by 24 plus 48 plus 1 lakh 20. And share forfeiture credited by calls in arrears credited by 24, 48 and 1 lakh 20. Share forfeiture credited by 72 and 2 lakh. So you can merge these two entries and pass one combined entry also. So this is how the combined entry will look like. Just added all the figures that I showed you. So share capital will be debited by 4 lakh 48, SPR debited by 16, calls in arrears credited by 1 lakh 92 and share forfeiture credited by 2 lakh 72,000. Now reissue entry. Out of 5,600 shares forfeited, that is 4,000 shares of Sargam and 1,600 shares of Dhwani, only 2,000 shares were reissued. And out of the 2,000 shares, full shares of Dhwani is included. So remaining 400 of only Sargam is included here. So reissue entry would be bank account 2,000 into the reissue. 2,000 shares reissued at 95 per share, 80 paid up. So paid up value is only 80, but reissue price is 95 rupees. So you get bank 2,000 into 95, share capital 2,000 into 80. Bank 2,000 into 95, share capital 2,000 into 80. So remaining is SPR. So therefore, there is no loss on reissuing these 2,000 shares. Now we need to know how much is transferred to capital reserve. That is the net profit, like what is the net gain that we transfer to the capital reserve account. We understand that there is no loss at the time of reissue. Hence, whatever the profit that the company has made at the time of forfeiture will be transferred to capital reserve account. But again note, all 1,600 shares of Dhwani is forfeited and reissued, and only 400 shares of Sargam is reissued. So therefore, we need to find the proportionate amount only for Sargam, not for Dhwani. Profit on forfeiture of 1,600 shares of Dhwani is 72,000. This figure you can find it in the forfeiture entry of Dhwani. Share forfeiture account will be credited by 72,000 in Dhwani's forfeiture entry. So that is this figure. Now when it comes to Sargam, the amount would be 2 lakh. That's because for 4,000 shares were forfeited, but reissued is only 400. So that means for 4,000 shares, 2 lakh is the amount retained by the company as being profit on forfeiture. So for 400 shares, how much? Do the variation. 400 into 2 lakh by 4,000. You get to know that it is 20,000 rupees. So profit on forfeiting 400 shares of Sargam is 20,000. Profit on forfeiting 1,600 shares of Dhwani is 72,000. Therefore, total profit on forfeiture is 92,000. And there is no loss on reissue. Therefore, this figure will be transferred to capital reserve. So there we go. The forfeiture transfer entry, share forfeiture account data to capital reserve 92,000. With that, we are done with the sum. Hope we are getting the answer for this. Here we are going to do the next question. Jeevadhara Limited invited application for 1,20,000 shares, 10 rupees each at a premium of 2 rupees per share, 2 on application, 5 on allotment including premium, balance in first and final call. So balance is another 5 rupees, I guess. Right. Application were received for 1,50,000 shares. Oversubscription just like the previous question. Shares were allotted to all applicants on pro-rata basis. Excess application money was adjusted towards allotment. All calls were made. Manu was applied for 3,000 shares, failed to pay the allotment and the call money. Madhur was applied for 2,000, allotted 2,400 shares. Please watch for this word, applied or allotted. Manu applied for 3,000 shares. Madhur applied for allotted 2,400 shares. Failed to pay the first and final call. Shares of both Manu and Madhur were forfeited, and the forfeited shares were reissued at 9 per share fully paid up. So the difference between this question and previous question, there all shares are forfeited, but only 2,000 out of that is reissued. Here all shares are forfeited and all shares are reissued. So let's start these journal entries now. So first I did the working note, as you can see over here. 1,50,000 and 1,20,000. These are the number of shares applied. These are the number of shares allotted. Ratio is 5:4. Number of shares applied by Manu is 3,000. So number of shares allotted to Manu will be 2,400 by variation. Excess number of shares is 600 then. Difference between these two. So excess application money will be 600 into 2, 1,200. Now we need to find what is in arrears. Allotment due from Manu is 2,400 into 5 rupee, 12,000. Manu has paid 12,200 in excess. Let's adjust that. So remaining arrears from allotment is 10,800. Now out of allotment due, which is 12,000, 7,200 is towards share capital. That is 2,400 into 3. And 2,400 into 2, that is 4,800 is towards SPR. Any excess will be adjusted towards share capital first. So here 1,200 is adjusted towards share capital. So still 6,000 due towards share capital and SPR is fully outstanding. Started with application entry, bank to share application, oversubscription, therefore received for 1,50,000 shares. Amount is 3 lakh. Transfer entry, share application account to share capital account to calls in advance. Excess application money was transferred towards allotment. Excess is 30,000, 30,000 into 2. 60,000 is transferred towards allotment. Allotment stage. Share allotment account attached to SPR account attached to share capital account. 1,20,000 shares allotted. Allotment money is 5 rupees. 2 towards SPR, 3 towards share capital. Splitting entry and called as a transfer and due entry. Next is bank entry. Bank, there's calls in advance, that means excess received from the application. Calls in arrears, that is Manu's arrears, we already found it. So let's fill these two items first. Share allotment, 6 lakh. So out of 6 lakhs, we have already received 60 and we are not going to receive 10,800 from Manu. So what we received is 1 lakh, 5,29,200. Now first call entry. Due entry, share first call to share capital, 1,20,000 into 5. Receipt entry, bank, calls in arrears to share first and final call. Calls in arrears will be 2,400 shares of Manu and 2,400 shares of Madhur. 5 rupees. So totally 4,800 into 5, 24,000 is calls in arrears. So net amount we receive is 5,76,000. Now forfeiture entry. Both the shares are forfeited, both Manu's and Madhur's, but I prefer to do the separate entry here, which will help you to understand it better. So Madhur's forfeiture and Manu's forfeiture and Madhur's forfeiture. Manu, share capital account 2,400 into 10 called a value. SPR 4,800. Just see the working note, you will understand. 2 calls in arrears, which means allotment due alone, 10,800. 2 calls in advance, 2 calls in arrears of calls due. Manu did not pay the allotment and call. So this is calls in arrears of call. Not necessary that you have to pass two accounts. You can have them as one account also. So 12,000. Share forfeiture is the balancing figure of this entry. So that means total this minus the total of this. Mathur's forfeiture. Share capital to calls in arrears to share forfeiture. Mathur didn't pay only the call entry. I mean call money, first call. So only that will be arrears. Remaining is paid, that will be profit on forfeiture. Now, all shares forfeited is reissued. So, 2,400 of Manu and 2,400 of Mathur. So, totally 4,800 shares. Reissued at 9 per share, 10 paid up. So, loss on reissue is 4,800. So, profit on forfeiture is these two figures, 6,000 and 12,000. Loss on reissue is 4,800. Therefore, the net gain that is transferred to capital reserve is 13,200. Hope you understood this sum. These are very, very important sums for from the chapter company accounts. When you see this, try these two sums at the same time of watching. Also, try the immediate next question. Thank you.